What's happening, everybody? Boy, what a terrible market day all the way around, right? Goes without saying. Oh, God, day that you just want to completely forget. Although the week for me was extraordinary. It's fantastic. I made a grip on AVGR, up over 100, or just under 175,000 cash on that profit, and so it was a great week regardless. But ended the week on a little bit of a down note with a couple plays right here. But this one, NDRA, Endra Life Sciences, that one actually turned out to be a really nice play. Just want to talk about, I'm getting some questions regarding Fibonacci extensions and Fibonacci retracements, how to actually use that tool. And so I'm going to go over that. And it's hard for me when somebody asks me via stock twits or Twitter, what the process is for that. Is I can only jam so much into 60 characters or so. So I'm going to try to explain that here and what I was looking at on this Indra trade, and then take a look at VKTX, AGRX as well, and then just look at AVGR again real quickly just to see where that's at currently. But anyways, NDRA, I was alerted to, excuse me, to this one right at market close, and I had to do some real quick analysis on this, and luckily my eyes just picked up on this is just a trade that I really like, and so I was able to enter right at market close at gosh, I think it was about 291, somewhere around there. But what I was looking at, and I have this set up to replay right now, so really currently present day we are like maybe about right in here, but I've hidden the other candle so we can see how it moves in real time. You can see how this all plays out. But the first thing that I was looking at this first run right here is on really good volume. That caught my eye at first, 597,000 shares. And then we're in a little bit of an area of consolidation right there. Like I've said before, the market is trending about 30% of the time, and in consolidation or trading sideways about the other 70% of the time. So I definitely look for stocks that are in trending mode, because that's a trend following strategy is just proven over time to be the most profitable. Trading with the trend. The trend is your friend, right? So what I saw first right here was this break right here on volume. And if you look over here, I draw a horizontal line right at this highest close right here. And on the hourly, I did get a break above, close above structure right there with these candles right here. That to me has signaled that the market in fact does want to go higher, and now looking to get long. Since I want to get long, I'm looking on the pullback, which would be the best point for me to enter. And what I'm looking for on this pullback, well, first off, let's draw a retracement right here so we can look at this level right here. This is what really interested me right here. If I draw a Fibonacci retracement from the lowest low, so what I'm going to do to draw retracements, I select my Fibonacci retracement tool, and I'm looking at the lowest candle and the lowest wick of the lowest candle, and that is going to be my first move. So really what I'm measuring, and I'm clicking on the lowest, and moving up to the highest, the top of that wick right there. That's all it takes to draw a Fibonacci retracement. That's it. And what I'm actually measuring is this entire move right here, this lowest low to this highest high right here. I'm looking at that. I have a move right there. I have another move back here. That's another leg right here. I have another move right here. I'm going from the lowest low to the highest high, or the highest high to the lowest low. That's how I'm selecting my moves. I'm not concerned about this congestion that happens right here. I'm just looking at extremes when I'm drawing these measurements, okay? So after I draw on that Fibonacci retracement, if you can see right here, something that I always love looking at is this 382 retracement, or retracement back into the 382, and it's respected 2 times. It's respected once right here, comes back up, meets resistance, but then it comes back down, finds support again for a second time right here, and then moves up above. This is what caught my eye. I like to get long on what's called the higher high, higher close candle. And what that means is I am going to fatten this up first so we can all see it. I'm looking for my lowest close candle, which is going to be this one right here. The high of that candle is going to be 278, the top of that candle wick. So I need to find a green candle coming into the play that is going to be a close above that 278. This candle didn't do it. this candle did right here. That's your buy right there. And then stops have to go below this swing low right here. I like it below this low right here. The problem is now you're getting really close to this low right here. And I would, if I could go back in time and do it, I would probably put it a little bit lower just to get below that low right there. So that would be my low. So when I was looking at taking this trade, I was coming in right at about this candle right here. We're getting right towards market close, right in there. So I had to do all this analysis really quickly, found out that I'm thinking by this higher high, higher close candle right here, what I'm saying with that is that this pullback right here, from here down to here, it's complete. That's what I'm saying with that, and the trend is going to continue higher. So I decided to enter right there at about 292, is about a $25,000 position. Stop is going to go right there. And also I knew one thing that I did before I took the position as well is I had to put a good guess as to, through technical analysis, of exactly how high, what my profit target on this would be. And the way I'm going to do that is going to clone this move, make a direct copy of it, and I'm going to put it, I really should put it right there. I think I actually put it here when I did my analysis, but now that I look at it, I got to pick the lowest point, which is actually going to be that point right there. So that's where I'd be looking at. So that's my profit target up here at about 333. I got kind of lucky actually, because I actually did it, I was doing it quickly. So I did it right there at 336. Yeah, I definitely did it here. That's technically the lowest low right there. So it really should be drawn, now that I look at it, from right there, your lowest point, okay? So now, for extra confirmation as to this being my profit target, I'm going to draw a Fibonacci extension. I'm going to draw, and what I'm looking for is I'm looking for confluence. I'm looking for things to start layering on top of each other that's going to help build a case for me to say this is where we can expect a turnaround. We saw that in that AVGR video as well as my Amarin video as well. Things like to typically turn around right around that completion of that second point up there. That's going to be my D point completion. So what I'm looking at for drawing a Fibonacci extension, I choose my Fibonacci extension tool, and I go from my lowest low to the highest high and back on in. And that's where we're looking at. You can start to see this starts to come in right around that 1618 Fibonacci extension. And I actually drew it from here, which is technically incorrect. And I got really excited because that was coming in right in at confluence right there at 337. So Fibonacci extension coming in perfect measurement with that harmonic move, that measured move that I put up there. And for those of you that aren't familiar, this is, those who watch my videos are all too familiar where I'm going with this. This is what's called an AB equals CD pattern. This is my A, this is my B, and that is going to be my C, and that's going to be my D. So what I'm saying with this is this AB move right here is going to be equal to my CD move right here. At D point completion, that's where I'm looking to sell, and I have further confirmation that that is a further place to sell. In fact, I got to draw it the right way, right? We talked about that. That further reinforces right in that area. I can expect a turnaround to start happening right around there. Now, before I do that, let's draw a line right here to see if it comes in at any kind of structure as I look left, because by all means, that is really looking at what we're looking at right here. And it starts to come in right around this high right here. You can see right there. And near some highs right here, some tops right there. I changed the time frame, so I kind of messed up the move on this a little bit. Let me redo this here real quick. Should be right. Let's do it like right there. Okay. Anyways, so that's the plan. That's where I'm looking at things going. And sure enough, on what was that, Thursday morning, this thing came out hot right out of the gate. I'm going to turn it on replay mode. And right there is the end of the day on Wednesday. That's when I entered. Slow it down just a little bit there. And look and see what happens right here. Right there. Right up there. D point was hit. I'm out. and then we went a little bit higher past this, the 1618, and then started to drop off right after that, which is where we're at right now. And so my profit target at D at 334 was filled. I'm out of the trade. It was about a 30. I did the math again. It was about a $3,600 and 36.50 trade on that, and for holding less than one trading day, it's really good. So I was happy with that. Obvious reasons. So real quickly on what exactly Fibonacci is, nobody knows exactly. It's a number sequence, and these numbers just keep coming around within our world for some odd reason. It's all mathematical based, but constellations are laid out using our main Fibonacci numbers, the 382 and the 618. That's on the Fibonacci retracement. The 1618 and the 127 extensions are my two main Fibonacci extensions. The 1414 is a minor Fibonacci extension. It's used in some advanced patterns that I look at, also in terms of looking for confluence with measured moves as well. But it's not considered a main Fibonacci extension number. It's just the 127 and the 1618 are. The 382 and the 618 are my two main Fibonacci numbers. You're dealing with Fibonacci retracements. And out of those two, the 618 is referred to as the golden mean. That one, more often than not, is hit. Like I mentioned, when you get a 382 retracement, that typically tends to indicate trend continuation. That's one of the main things that I look for when looking to enter a trade. If I get a turnaround at the 382 with a higher close like we did right here, that is a great signal for me that the market wants higher, and more often than not, I'm going to be pretty aggressive with that trade. The 50% is not considered a Fibonacci retracement number, but it is considered, it plays into Dow theory, when one of the tenets of Dow theory is markets of 100% of a move, say A to B, call that 100% of a move. It's very typical for markets to go ahead and give up 50% of that move before continuing. So 50% plays a factor as well. It's a good number to have on the tools as well. But understand that, I mean, I can draw a bunch of lines on here, a bunch of measured moves and extensions and retracements and everything, but it really does come down to structure. Where are these moves coming in at? And I can see right here, I've got a little bit of, like I mentioned before, I've got some resistance coming up right here, and that's exactly why this stuff turned around. It came up, hit that, and proceeded to go ahead and pull back. But that was my methodology with that. I'm very fortunate I got alerted to that later on in the day. I looked at the chart real quick. It looked great. I took it, and it was a big benefit. So that worked out great. Let's go over to VKTX. As far as a reentry on this, let me talk about that real quick. I know that they have some data coming out next week. There might be more of a run coming into next week. It's just once D point completion is hit, all bets are off after that for me. I really don't know. Now, you could look at this to be continuing a trend. Let me clear this out. You're making a higher low right here, a higher low right here. If you do get a break above and a close above, say 349, that's a good indication that the trend is going to continue upwards. It's just we're getting really close into data right now. Anything can happen with that. And I already made my money on the trade, so I'm happy to go look for another play that I would consider high probability but low risk. If you were to get a close above that 349 level and data is coming down the road, I would consider that high probability but higher risk as well. If that data turns out to be sour, then down you go. That just depends on people's psychology and trading plan and all that stuff. For me, I already made my money. I'm on my way out. So I mean, I can look at it this way too. It already broke above and closed above these levels again right here. I think in my heart of hearts, it definitely wants higher. I don't want to mess around with the data for right now. I don't know a whole lot about it, what they're looking for, what the likelihood is of it, so I'm just going to steer clear. VKTX. This one was just a disaster of a day, but I did take a position on it, and I'll show you why. Okay, what happened there? There we go. If I look at this level right here, well, let's draw this all in again. So what I'm looking at right here, I'm going to draw some line of resistance right here. And what I'm looking at is this. I'm going to draw a retracement here, and I'm going to measure this first move right here. lowest low to the highest high, and look what I get. I get a turnaround right at the 382 retracement. Fantastic. That tells me condition number one for what I really like to get into is met. Turnaround at the 382, and I'm also getting a break above, close above. Actually, this should be redrawn a little bit closer, actually, right there, right above the most recent level of structure. Break above, close above. That tells me the market wants higher. Okay. So now I start looking at drawing in my trend line. Lowest low to the highest high. Now I start projecting where I think this wants to go. Keep in mind, like I said, it already broke above and closed above this most recent level of resistance, and now we're in the middle of a pullback. This break above, close above right here is a signal to me that the market wants higher. So I'm going to take this and put that right there. Now I'm looking at right up in here as being roughly my target where I'm looking at things to go. Now I'm looking for that higher high, higher close candle. The nice thing about this pullback right here, since I never got a higher high, higher close candle, I never would have entered this trade. Why I did is I think that this is going to just encounter a lot of buying power coming around here. I see it right here. Things really got eaten up quickly first thing in the morning on the 21st. And that was with good volume too, about 960,000 shares. I would not be surprised at all to see the market react the same way right here. And the reason why I decided to take it right at this 830 level is because right here is that most recent level of support. So in terms of a stop, again, before I place a trade, I'm always thinking, what's my maximum that I can lose on this trade? Okay, how's the worst I can get hurt on this? And if I'm taking it right at structure right here, I can put stop loss right there, I'd say about 817, and have very low risk to the downside with this. Okay, and what I'm also saying right here is this is an upward trend. I have a low right here, my initial low. I have a higher low right here. I have a higher low right here. Conversely, I'm making higher highs. I have a higher high, higher high, higher high. So I'm in an upward trend if I were to look at this whole thing in that kind of fashion. Okay, so if I violate this low right here, then technically I've broken trend. I think that this is going to have another turnaround right here. It's very low risk. I can still get out, provided there's not a massive gap down at the beginning of the market, which can happen, but I'm willing to take that risk. I think this thing's going to turn around. People are going to encounter the same type of psychology first thing in the morning on Monday. I wouldn't be surprised if that happens. It's worth the risk. Now, if I could draw a Fibonacci extension right here, let's see if I can get some confluence at the top of that move right there. Lowest low, highest high, back on in. Nothing's really matching up beautifully with that, but it is coming in right around there. Let's draw a line and look left to see what kind of clues with structure comes in. I'm going to draw one right there, draw one right there. Anything coming in? You can see, okay, let's see here. Starting to get right kind of near those tops. There's no beautiful, it's not an exact science, it's just an idea. Nothing fantastic there. I would take this to the top of that measured move right there, and that's what I'm looking for right there. That's going to be, my profit target's going to be about 954. If I go ahead and I do my risk reward, I took a position at 830. I've got my stop set at about 817. I know I'm risking 1.69% to the downside. I can stomach that if I'm wrong. That's not going to be a problem. While I'm risking to the upside to gain potentially, say about 14.5%. So I have a risk reward ratio of about 8.6 to 1. That's a fantastic risk reward ratio. I know that I've broken to the upside. I know I'm in an upward trend. That break to the upside right there, past the most recent level of resistance, is a clear indication to me that the market wants higher. Now we're just in a pullback. Taking it at structure right here, I think is definitely worth it. If you wanted to play it on a more conservative side, you can actually play the higher high, higher close right there. If you get a higher high, higher close candle, say maybe 846 or so, that would be a good signal for a buy. The problem that you might run into is that confirmation candle, instead of closing out right there, it might close a green candle, say about right here, and that might be your entry at, say, 870, and now you're looking at an entry at 870 with a stop right there at 816, and then you'd be peeling off at, say, maybe about 951. So now your risk reward is what? Is about 1.5 to 1. You're risking a little over 6% to the almost 6.5% to the downside, while looking to gain 9% to the upside. So you could do it that way. It's still I don't like anything less than a 1.5 to 1. That's close enough. So I mean that's another way of doing it as well. It might just be riskier first thing on Monday if things come in really hot out of the gate, particularly if volume comes in right in the beginning. Which after this big sell-off on Friday, I wouldn't be surprised to see some type of relief rally on Monday. So that's my plan with VKTX. AGRX has just been a headache right now. I don't like this move at all. I feel like I'm going to get stopped out on this for a significant loss. Be about $9,000 loss, I think. Not going to be happy with that. But we'll see what happens. What happened with this? I did have a stop at where was it? I think it was maybe about 149. What I did not like seeing was this candle right here. I had to get below that low right there. So we're coming in right close to my stop right now. We'll see what happens. This is a bullish pennant pattern, and typically what will happen with a bullish pennant pattern is that they will break to the side of the previous run. So the previous run was a very bullish run right there. I was expecting a break up north. It looks like we're breaking down the other way. I'm not liking that. I guess if you really wanted to, I don't know. I'm just not liking this, but I'm going to stick with the plan and see what happens first thing on Monday. Hopefully, get a rally. And I think there are just fundamentally some really good things behind this company. We just got to see what market conditions are going to bring on Monday for that. AVGR, again, with AVGR, I exited. That was I was here to here, and then it was here to here, and and I exited about mid to high 90s on that, and you can see that things just dropped off right there. In terms of looking to re-enter on that, I mean, you're still in a bullish trend without a doubt, and market's starting to give a lot of those gains back for anybody who was in early. So if I were to look at that, you've got a retracement down to the 50% right there. What I'm seeing right here is kind of the same thing I was seeing with AGRX, seeing a bullish, what's this going to look like here once I draw it in? Really a flag. I mean, you could draw it that way. Bullish flag pattern like that. So you're looking for a break to the upside coming up on this trend line. I think if you get a break above this trend line, I'd say maybe about 91 cents, especially with volume behind it, that might be a pretty good look. I'd like to see it get above this high right here, which is going to be 94.18. So maybe it close above 95 and continuing north. Then looks like you might look to retest those highs at about 108, 109. Other than that, I don't know, getting too close to data. This thing, people are selling it off right now. I'm just steering clear of AVGR right now. I've got to look for better plays out there. All right, kind of a long one. Thanks for listening for the whole thing. If you like it, please leave me a message. Tell me what you like, what you didn't like, whatever the case may be. Give me a thumbs up, feel free to share it. And hopefully this helps people see the markets in a different light. And better luck next week for a lot of people other than last Thursday and Friday, especially Friday. Friday was just a bloodbath, but we'll have better days ahead. It always works out that way. Talk to you soon.